Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm so excited to welcome you to yet another promising edition of the Extreme Speed Live. And in fact, happy holiday to everyone and happy Thanksgiving. Let's quickly run through our daily routine by confirming that we are all on the same page. So if you can see my screen and you can hear me loud and clear, please let me know in the comment section by typing in hi. Your highs will be a feedback for me to ensure that we are all on the same page, and then let's kickstart the session. All right, let's see what we have here. Oh, great. Thank you very much, guys. I really do appreciate this feedbacks, and I'm loving the energy at this point in time. Hello, Carrie. Good morning to you. Glad to have you around with us this morning. Meme 500. I am a man lovely. I like that name. Good morning to you. Katira, good morning to you. Vote one, good morning. Simonomath, good morning to you. Gada, good morning. Harowo Lotoba, good morning to you too. Abe86, vote one, good morning. Thank you very much. So, with this handful of feedback, I will take this as a confirmation that we are good to go this morning. And it's on this note, I welcome you all once again to yet another promising edition of the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey as we are going to be dissecting the current market conditions from a technical standpoint using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today's trading session. Well, since the beginning of the week, we have been monitoring four major assets, which include the US All Spot, the US Tech 100, the New Zealand USD, and of course the XAUUSD, all of which have been doing pretty well. And today we are going to be dissecting them to see what has really happened and how we intend to manage our existing positions while we also look out for new trading opportunities today. And in fact, we have quite a lot of interesting development in the financial landscape, which is affecting the market sentiment so far. And we are also going to be looking into all of this while we make our informed decisions. So I encourage you to stay tuned in. Grab a coffee, water, whatever it is, so that you don't miss out on any of the insightful ideas we will be deliberating on today. So, with that being said, we will be diving right into the business. And for those of you who are joining us for the first time, I did not forget you guys. I'm very glad to have you around with us this morning. And I know you will be wondering what this is all about. Well, let me simply put it, as technical traders, we usually gather here on a daily basis as a community and engage in follow-ups and reviews of our current positions in preparation of the New York sessions. This session officially kickstarts 10 a.m. UTC, 11 a.m. West African time, and I encourage you to stay tuned in so you don't miss out on any of the valuable ideas we will be sharing today. Now, please note that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here in this community to enhance your own trading decisions and strategies. Once again, I welcome you on board, and I also encourage you to actively engage in the comment section. So with that being said here, let's dive right into the business. And as usual, the first thing we normally do is to check on the economic calendar. And for those of you who have been with me for a while, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. So for today's economic calendar, we will be focusing on the high impact event from the economies that affects the asset on our watch list, which includes the United States, the United Kingdom, and of course the New Zealand economic docket. Now let's see what we have here for Thursday, November 23. We have a series of high impactful event here. One of them is coming in from the United Kingdom and the other is coming in from the New Zealand economic docket. Now for that on the United Kingdom has already happened about an hour or two ago, and that is the S&P Global Publications. Now for those of us who don't know how important this is or what the S&P is all about, well, these publications cover a wide range of topics including market trends, credit ratings, economic indicators, and industry insight, hereby providing valuable information to investors, financial professionals, and businesses, helping them to make informed decisions and stay abreast of market development. Now, this is why this is a very important event. Now we have three factors which comes in from the S&P Global Publications. We have the composite PMI, the manufacturing PMI, and the CIPS services PMI, which captures the service, the industrial and manufacturing sector in that regard. Now, when we look at the data that came in about an hour ago, all data for these features came in beyond expectations, giving us positive deviations in that regard. And what does this tell us? It tells us how buoyant or how expanding the United Kingdom economic docket is. So we want to be looking forward to see how the market has reacted to this event so far, and let's see how we can capitalize on the next move. So don't worry, we will be talking about the GBP USD in a moment. Then the other one we are looking forward to here is the retail sales data coming in from the New Zealand economy, and this is coming much more later today. That's about 10 to 11 hours from now. And for those of us who don't know what the retail sales data is, well, this is released by the Statistics of New Zealand, and it measures the total receipts of retail stores. And changes in retail sales are widely followed as an indicator of consumer spending, which of course the higher the spending, the more buoyant the economy is known to be. Now, in this case scenario, a higher reading is seen as positive for the economy, which of course will dovetail in positive traction in favor of the New Zealand dollar. So we are going to be looking forward to what the data is going to be like on this particular assets we've been looking at. Now look at what has happened in the previous quarter. We have minus 1%, and we have economists projecting minus 0.8%, which is something commendable. So majority are expecting that there's going to be a little bit of expansion in that regard. So we look forward to see what the actual data is going to be like on this one. Will it be just as expected, below expectations, or even beyond expectations? But one thing we do know as technical traders is that the anticipation of this event alone usually bring in some market sentiment into the market, which will reflect on the chart as price action. Now, talking about price action, let's dive right into the business and let's see what is going on in the market right now. So the first asset we are going to be taking on this morning is going to be the US All Sport. And as usual, my US All Sport is taking some time to load up. So we'll have to take some time to see how long it will take. I hope it takes all right, great. So the next asset we are looking at this morning is the US All Sport, and in fact we had a phenomenal bearish momentum happened during the New York session yesterday, as we were able to scoop in over 800 pips from multiple entries on this particular asset. Now, talking about this, let's look at what is going on in this market from a fundamental perspective, and why is it that we experience that massive bearish momentum to the downside. Well, yesterday we had a latest and unexpected decision by the OPEC Plus to postpone their meeting on production cuts, which was supposed to be happening from November 25 to November 26 to now it has been postponed to November 30. Now, this development raised concerns about global crude oil supplies and could potentially drive oil prices further to the downside. And as a result of this development, we saw how the market reacted to this postponement, leading to this strong bearish momentum to the downside. Then in addition to that, I told you yesterday about the recent increase in US stockpile, which rose to a phenomenal 9 million barrels for last week, as against the upper week, which came in at 3 point something million. That is another phenomenal growth in stockpile, which of course gives us an insight into the increase in supply of US oil in the market. And of course, we know that when there is a high supply, price tends to drop to the downside. And everything we're seeing on the chart is in alignment with what is happening behind the scenes. Now, let's run through the current market structure to see what really happened, and for the sake of those who missed out on our earlier session, to be on the same page with us. So at the beginning of this week, we noticed here how price action was initially confined within a range that is between the $76.80 level and the $76 area, which happens to be our key level for the week. Don't worry, we are going to be talking about that in a moment. And considering the fact that price action was within a range, we were waiting for either the breakout of the resistance line for buying opportunities or the breakdown of the support line for selling opportunities. And right here during our live session on Monday, we capitalized on the breakout of the resistance line right here to incite that bullish momentum. And in fact, we rode it all the way into that level at the $78.40 area, giving us over 160 pips in profit on that single move. And you know how we do it in this community. When price action moves significantly well in our favor, we move our stop losses to secure our positions, and we did that before the bearish momentum happened. Then during our live session on Tuesday, we saw our price retraced back into a range, and we were of the opinion that price action may likely continue the uptrend as we position ourselves just exactly above the $77.50 area to capitalize on the bullish move. Now, during our live session yesterday, I told us all that we want to be moving all stop losses, secure the current buy positions, as there are chances that sellers could come in, especially after observing the increase in US stockpile during yesterday's trading session. So we did move our stop losses accordingly, and I did told you that if price action does not continue to the upside and instead breaks down the $71.10 level, we will be joining a bearish momentum to the downside. And this was exactly what happened a couple of hours into the New York session yesterday, as we capitalized on that bearish move, riding it all the way to the downside. And remember that we had multiple entries marked out on our chart to maximize that potential of the bearish move. So we had levels had the $76.80 area. We also added one more at the $76 level to join the bearish momentum to the downside. And for those of you who capitalize on this opportunity, well done and kudos to you for being on standby to capture this move. And by now you must have been out of all sell positions, as you must have moved your stop losses accordingly, like we always do when price moves very well in our favor. Now, in anticipation of the New York session today, how do we intend to capitalize on the next move? What are the chances that price will continue to the downside, or are there chances that price will climb up again? Well, before we can have a better perspective into what is going on here, I would like us to have a quick review of the higher time frame. Let's refresh our memories as to what we saw at the beginning of the week that led to the decisions we have made so far. And to do that, we will be scaling back up into the 4 hours time frame, where we were able to identify a simple setup that guided our decisions at the beginning of the week. So right now we are at the 4 hours time frame, and remember that at the beginning of the week we took into consideration the nature of price action in the last 3 to 4 weeks, and what we have here was a beautiful descending channel. After connecting the series of lower highs, we have the resistant line of this descending channel, and after we connected a series of lower lows, we have the support line of that descending channel. And usually when we have price within a range like this, we expect that price will continue to the downside. However, something interesting happened at the beginning of this week when we saw price break out both of our key level and the resistant line of that descending channel to incite an uptrend scenario. Now, you know that whenever we see price break out of a structure like this from a technical standpoint, we do expect that price at some point will come back and retest the structure in anticipation of another wave of bullish momentum. And of course, if you see what happened here in the last 24 hours, we saw our price came back into the resistant line of that descending channel. And look at what happened when price tested that area. We saw an engulfing bullish candle spring out from that area, taking out all the losses from yesterday and bringing price back above our key level for this week. And you know how we use our key level. As long as price remains above our key level, we want to be looking out for patterns and structures that supports the idea of buying this asset. Now, the question we have in our minds right now going into the New York session is, will this retest of structure incite new waves of bullish momentum to the upside, or are we likely going to be seeing price drop further to the downside? And in fact, I will feel comfortable selling from this from a long-term perspective only if price action will break down this $75 area. So for me to sell actually at this point, I want to see price drop below the $75 area. But as long as price remains above the 76, I want to be looking out for buying opportunities. Now, with this information we have on the higher time frame, I think we all have a better perspective from a technical standpoint what is really going on in this market. And don't forget that today being the Thanksgiving Day, the US markets is going to be due to the public holiday, the observation of the public holiday, the market is going to be closed for today, which might limit whatever traction the market wants to push for today. So scaling back down into the 1 hour time frame, let's look at what is really going on around here. Now, what I did this morning while trying to profile a decision today is to look at what really happened during the Asian session. Now, during the Asian session, we saw our price was confined within a range that is between the $76.80 level and the $76 area to emphasize the level of indecision in this market at this point. Now, one interesting thing about this range here is how this range was where the price action started this week. Remember, we saw price fall within this range at the beginning of the week, and right now price action is back into that range, just right above our key level for this week. Now, this tells us a lot of how important and crucial the current juncture is at this point in time. So what we want to be doing now as technical traders is to exercise patience and wait to see how the market is going to be reacting to the zone. Personally, I want to be looking out for buying opportunity, of course, based on what we saw on the higher time frame, where I have a buy stop order sitting above the $76.80 area to capitalize on that uptrend move. And if price continues to climb up, a breakout of the $77.10 level, the $77.95 area, and of course the $78.40 level, which happens to be the highest level for this week, will be what we will be breakout of these levels will be what we will be looking out for to buy the US oil spot today. So personally, I want to maintain a bullish bias on the US oil spot for today. However, in as much as we're looking out for buying opportunities, we cannot ignore the potentials that sellers could come in at any point in time. And remember, I showed you something on the 4 hours time frame where I said I would love to only sell if price action will break down the $75 level. Now, I wouldn't want to be selling on unless price breaks down the 75 level, as you will see right here. So I do want to be marking out that structure right here. So we mark this $175 area. However, if we look at the distance between where price action is right now and that $75 area, you will see that we have a whooping 130 pips thereabouts. So are we going to allow 130 pips to happen before we can start considering selling? Of course not. So what I'm going to be doing here is to see how the market is going to be reacting to this key level at the $76 area. Now, if a breakdown retest of structure happens, which reveals potentials of selling opportunities like lower lows and lower highs on our lower time frame, then I want to start considering selling. And please note that while we sell, we want to ensure that we are on standby to move our stop losses accordingly to secure the current sell positions. And if price continues to drop, then a final breakdown of the $75 area will finally welcome more selling opportunity, giving us more confidence to add more sell positions. And if price continues to drop and it breaks down that lowest point for this week at the $74 area, then we are likely going to be seeing a massive sell-off to the downside. So this is how we are going to be managing our positions for today on the US oil spot. Let's see how the market will play out. Like I said earlier, I'm holding on to a bullish bias here, waiting for the breakout of the $76.80 level. But if we see signs that price wants to continue to the downside and we begin to see series of lower lows and lower highs below the $76 area, we can actually risk some selling opportunities while we look out for the breakdown of the 75 and 74 level to now feel confident adding more sell positions to our existing trade. So these are my views on the US oil spot. It's a very, very simple setup, as our center of focus for this morning is going to be between the $76.80 level and the $76 area. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So let's see how this will play out. And if you have any questions whatsoever, feel free to let me know in the comment section below. I will be taking the next 10 to 15 seconds off as usual to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, so what do we have here in the comment section? So the first one here is a comment from Opebalo. I hope I pronounced your name correctly. Trust you're doing very well. You're asking that do you set orders separately at the levels or at once and keep moving your I guess you want to say TP and stop losses. Yes, I do. And in fact, I usually mention this countless of times in this community. Probably you missed that instructions. So what we usually do here is to, it depends. Now, whenever we want to take advantage of breakout of structures, it now depends on where you are with us in this community. Now, if you are someone who have been part of the profitable journey we have been taking so far this week, definitely you must be in profit so you can afford to leverage on some of the profits you had made so far this week. So what I simply mean by that is because of the fact that you've been very, very profitable so far this week, you can easily place a buy stop order, in this case scenario, at the $76.80 level, above that level, to capitalize on that uptrend move. And if it doesn't work out, you know that you are only risking some of the profits you had made so far this week. However, if you are new with us and this is your first position you're taking with us and you don't have a leverage at all to capitalize on that move, then I want to encourage you to wait for confirmations to happen, which usually reflect on the chart as price breaking out the structure, scale down to your lower time frame, maybe 5, 10 or 15 minutes time frame. Look out for retest of structure to confirm that truly buyers are going to the upside. So simply put, there are two ways to which you can capitalize on this depending on where you are with us. So if you're profitable, you can easily place a buy stop order knowing fully well that if price goes against you, you are only risking some of the profits you had made. But if you're new with us and this is your first position, then I encourage you to wait for a breakout retest of structure to capitalize on the move. So I hope I answered your question there, Opebalo. Please let me know in the comment section. So I see you, MS Panseni. Good morning to you. Kedrick 155. So you are saying I just explained this to us today. I gave us two perspectives which we are looking at, and I told you how our center of focus today is between the $76.80 level and the $76 area, where depending on the breakout, the direction of the breakout of the structure will give us an insight into where price will be going. And I told you how much I'm tending towards a bullish momentum, basically because of what we saw on the 4 hours time frame, which is in alignment with an uptrend continuation. And I also stated that the only condition that will make us want to be selling is only if price breaks down and reaches the $76 area and we begin to see series of lower lows and lower highs on our 10 minutes time frame. Then we can actually join and add more positions at breakdown of structures such as the $75 and $74 level. So that is simply what I said there, and I hope you get that clear. Kendrick 1555. All right, Ramona 85, good morning to you. Najmal, good morning to you too as well. Ope Pablo, all right, great. I'm glad you found that very, very useful. So in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, which also had a phenomenal spike during yesterday's live session as we saw price move a phenomenal 180 pips move before that bearish momentum, taking us out of all the buy positions at a reasonable amount of profits. And I do hope you guys took advantage of that opportunity. And right now, it appears price action is within a limbo right now, as majority are weighing, or probably, let me say, digesting the latest fundamental factors behind the scenes that is driving the US dollar. So far this week we've been buying the asset. Of course, we bought at the beginning of the week. So let's run through this quickly together and see what led to the decisions we made at the beginning of the week. Now, at the beginning of the week, we were noticing that price action was actually ranging and confined within our key level at the 15,850 and of course the 15,790 at the beginning of the week. Now, in addition to that range, we saw how price action was trading just above the ascending trend line we identified on the higher time frame. And for the fact that price action is sitting above our ascending trend line, we were more of the opinion that price action will be breaking out of the resistant line of that range at the 15,845 level. Now, prior to our live session on Monday, I told you that I already had a breakout of structure triggered, and that for those of us who missed out on that opportunity, that let's see if the market will come back to retest the structure so that we can join that uptrend move. And that was exactly what happened. We saw price come back to retest the structure, and since that moment we have been buying this particular asset. Now remember that we also had multiple entries here, where we saw we had the 15,880 level, where we said we will be looking out for more buying opportunities. And then we also had another level at the 15,970 to maximize that bullish momentum, and we rode it all the way to the upside. Let's see here, we had about let's see, for the first buy position we had about over 200 pips in profit on that one, while the second position gave us 180 pips, and the fourth position here gave us about 100 pips thereabout. So we were running with about 400 pips before the bearish momentum came in, taking us out of the buy position with a reasonable amount of profit. Now, on Tuesday, we talked about the potential of price action breaking down the this level here at the $16,015 area, and we said due to the continued selling pressure that emerged during the Asian session on Tuesday, that we might see price break down that range had the 16,015. And of course, for those who missed out on the breakdown, price did come back, retest the structure, and push price to the downside, giving us over 140 pips move before we begin to notice buy pressure resume in this market. And during our live session yesterday, we acknowledged that the appearance of buy pressure around the 15,880, as we saw how it became difficult for sellers to break through this area. And because of this, we said there is a likelihood that price will be breaking out of that descending trend line, giving us a beautiful reversal pattern to work with. And you know how we do it in this community. Whenever we have a transition of price action into a reversal pattern, we want to be marking out the neckline that we will be using to validate the reversal setup. And we did identify the 15,940 during our live session yesterday, and we said we will be capitalizing on the breakout of the 15,940 to join the uptrend move. We also had multiple levels at the 15,970 and of course the 16,015 to maximize this potential move to the upside. And that was exactly what happened. Price moved very, very well in our favor, and I do hope you moved your stop losses accordingly. And if you had done that, you must have been taken out with a reasonable amount of profit. And for those of you who took advantage of that move, Well done and kudos to you for capitalizing on that one. Then after that bullish momentum, we saw our price action went into a choppy scenario, as you will see here that since the later part of the New York session till this present moment, price action had been caught within a range. Now, going into today's trading session, how do we intend to capitalize on the next move? For us to be able to make an informed trading decisions today, I would like us to run through the higher time frame to see what is really going on in this market from an holistic standpoint so that we can have a well-informed trading decision. Now, scaling up into the 4 hours time frame, which was where we started our analysis for this week, remember that we took into consideration the nature of price action since the last trading week of last month of October, and what we saw here was an obvious bullish momentum. And after connecting the series of higher lows, we had a couple of ascending trend lines to guide our trading decisions for this week. Now, in addition to this ascending trend line were a couple of key levels we were able to spot here. The most important one here is our key level had a 15,850, and of course you know how we use our key levels in this community. As soon as price breaks out of our key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. Now, we saw what happened at the beginning of the week. Price broke out of that structure, came back into that zone to retest it and started another wave of bullish momentum. Now, as it is right now, following the choppy scenario we are seeing here, it is quite clear that participants are in a dilemma right now, not sure if price will continue to the upside or drop further to the downside. And this is not coming to us as a surprise, as we do know that price action just hit a new high at the $16,050 area, and usually when price action finds a new high like this, it takes quite a while before price action acclimatizes to that level. Now, because of this situation, when price finds a new high, there is always this tendency for majority out of fear to start closing in their position in the fear that there will be a crash anytime soon, and this usually results or transitions into choppy situations, consolidation phases, and even retracement move, which is characterized with what has been happening here since price tested that new high. Now, as it is right now, we are within a range which gives us an insight into the level of uncertainty in this market right now. So we have the 16,050 and of course the 15,880 area, which has held price into an indecisive phase at this point. Then another thing I would like to call our attention to is the nature of the candle that's transpired after the breakout of that resistance line happened here yesterday. As you will see, it closed in the form of a shooting star candle, which reveals the presence of sellers in this particular market. And as you will see, buyers are still yet to break out of the structure. So in that regard, this reveals that sellers are still very, very present at this particular point in time. And for me, the only condition that will make me feel comfortable buying this asset at this juncture is for price action to break out of the 16,050, where we look out for buying opportunities to join the uptrend move. But if selling pressure persists below the 16,050, chances are that price action will drop to the downside. And if we take a closer look at what is going on here, you will see that the ascending trend line we identified earlier has been broken to the downside, and in fact we have something here that looks like a retest of structure where selling pressure is still persisting below the ascending trend line. So in that regard, I want to see price drop below the 15,970 to capitalize on a downtrend scenario. So our center of focus for today's trading session is going to be between the 16,060 and of course the 15,970 level where price action has been trapped within the last 24 hours. So let's see how the market will play out here. If price breaks out of the 16,060, we look out for buying opportunities, and if price breaks down the 15,970, we look out for selling opportunities. So let's see how this is going to play out. Mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So let's see what happens. We will be back here tomorrow to review how well these assets have been doing. So we have a beautiful range here: 16,060, 15,970. Let's see how the market will play out here. If you have any questions, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds to see if there are any questions, after which we move on to the next asset on our watch list. All right, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move right into the next financial asset on our watch list. So the next asset on our watch list for today is the New Zealand USD, which was introduced to us by what's his name again? Rice Rick. So Rice Rick introduced the New Zealand USD to us yesterday, at the beginning of the week, and we had the privilege of joining some bullish momentum after price action did break out and retested the key level we identified on the higher time frame around the 0.600 area as we join this momentum to the upside. But so far in the last 24-48 hours, we have noticed the re-emergence of selling pressure around the 0.6750 area. And during our live session yesterday, I told us all that there are still chances that price will continue to the upside on this one, and I did told us to wait for the breakout retest of the 0.60410, which just happened during the early hours of today, to push price to the upside. And if you are taking advantage of that move, I want to encourage you right now to get out of this position, as you will see that price was unable to break out of the previous high from Tuesday's trading session, giving us clues that sellers are gradually building up some momentum. But that does not necessarily mean that we will ignore the potentials that buyers could to push price further to the upside. Now let's scale up into the higher time frame. Please, let's see what is going on from an holistic perspective, after which we will come back into the 1 hour time frame to make an informed decisions. Now on the higher time frame, we saw this interesting setup on the daily time frame, where we took into consideration the nature of price action since the beginning of this year, and it was very, very obvious that price action has been bearish, as we had series of lower highs marked out to give us a couple of descending trend line to work with, as you will see here. And of course, whenever we identify descending trend lines like this, we want to see price remain below the structure to give us opportunities to sell. However, something interesting happened in this market since the month of September, as we saw, despite the series of lower highs, sellers were unable to break through the 0.58600 area and the 0.5770 level, as you will see every attempt by the sellers to break through this area was met with stiff resistance from the buyers, giving us a potential reversal pattern building up in the space of 1 to 3 months. Now, in this case scenario, after identifying that reversal pattern, we marked out our neckline, which coincidentally happens to be our key level for the week around the 0.600 area. And of course, you know how we treat our key levels and necklines. We need price to break out of the neckline to validate the potency of that reversal pattern. And with that case scenario here, we were looking out for price above the 0.6 area to join a bullish momentum. And that was exactly what happened at the beginning of this week. We saw price break out of the key level. We took advantage of that momentum, but it appears that it didn't last long as we saw sellers push price to the downside. And this is not a surprise to us at all, as we're still within the seller's territory, which is just right below that descending trend line we marked out at the beginning of the week. Now, the question here is, will the buyers be able to break through this supply niche here, especially after considering the recent development in the U.S. economic docket? Remember, we are caught within a scenario where majority market participants are divided amidst the potential of a rate hike or a rate hike in rate cut in recent time, and this is for us a big dilemma, as majority are still trying to digest what really will be happening in the recent days. Now, as a result of this, we have been noticing some consolidation phases around this area. So let's scale down into the 4 hours time frame. Let's see what is going on there, and if there are chances that we could spot some setups that will guide our decisions for today's trading session. Now, I'm going to scale down into the 4 hours time frame so that we can see things from a much more lower time frame. And if you look at this structure closely, bringing out the line chart, I think I'm beginning to see something like a wedge gradually unfold on this chart. And if we draw this appropriately, we should be having something. Can I see this one extending to this area? No way. So I think around this area will be quite fine. Now we have something like a wedge going on right now, which has a tendency of inciting a reversal setup. Now, if price will break down this ascending trend line here, just right below the 0.60410 area from a long-term perspective, this might likely incite a bearish momentum. So let's take note of this level around the 0.60410 area. Breakdown retest will also lead to the breakdown retest of this trend line to incite a downtrend move. Now, if we are going to be selling here, we want to be very, very mindful of this opportunity, as there are chances that buyers can still come in. So immediately price action moves in our favor, be on standby to move your stop losses accordingly. And in fact, if price drop to as far as the 0.600 level, which happens to be our key level for the week, that's about 38 to 40 pips, move your stop loss, secure the positions while we wait and see how the market participant will be reacting to the 0.600 level to decide what our next line of action will be. A further breakdown of the 0.6 will welcome more selling opportunities, while buy pressure above this area could still incite bullish opportunities. So we are at a very, very crucial juncture here, and patience is really, really required to scale through this current market structure we have here. So for me personally, I think price will want to be dropping to the downside, as the continued selling pressure around this area and the inability of price to find a new high, for me, is a red flag that sellers may likely be dictating the pace for the later part of this week. So let's see how this will play out, and we'll be back here again tomorrow to review how well these have done, and then get ready for the last trading day of the week on this particular asset. If you have any questions whatsoever, feel free to let me know in the comment section, as I will be taking the next 10-15 seconds to see if there are any questions before we move on to the last asset on our watch list for today. So I see a couple of comments here from JB3459 and Max. Good morning to you guys. Both of you want us to do GBP USD and Euro USD. Unfortunately, the GBP USD and the Euro USD is not part of the asset we are looking at for this week, and because of the time I have left with me, I'm not sure I'll be able to take those assets, so I'm very sorry I wouldn't be taking that today. So that is why you want to be part of the Monday session, so that you can give us the assets you want us to look at for the week. All right, so the last asset I'm going to be taking right now is going to be the XAUUSD, so I'm sorry about that. Okay, so I see Odinachi. Okay, good morning to you. Queen Wild, good morning to you. All right, Max, I'm glad you are very understandable as regards to that one. So with that being said here, let's move on to the final assets on our watch. Then one more thing I would like to mention on the New Zealand USD is this high here. Now, I didn't talk about the potentials of buyers from this current structure, so I want us to be marking out this highest level on our higher time frame, which is the 0.606 50 level, which if price action breaks out of that structure, it would have taken out all the sell positions around that area to signal an opportunity to buy. And if you are the patient one, a retest of structure would be a very beautiful confirmation to join that uptrend move. So let's see how this will play out in the New York session today. So with that being said, let's move right into the final asset for today's trading session. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, my favorite asset, of course. And this asset here have been doing phenomenally well since the beginning of the week. Remember, we have been buying, and in fact, we've scooped in a minimum of 300 to 400 pips on this particular asset for this week. Now, let's run through this from let's run through how the week started for us here in this community, as majority who are not part of our earlier sessions, so that they can also be on the same page with us. But firstly, I would like to emphasize here the growing sentiments that the Federal Reserve won't pursue further interest rate hike, and gold prices rebounded during the Asian session as regards to this general belief, countering the retracement we saw during yesterday's trading session. Then another thing is this dynamic situation, which is accompanied by the 10-year US government bond yield hovering near a 2-month low, and this is also contributing to the weakness of the US dollar, which usually will be supporting safe haven assets such as the gold. Now, from a technical standpoint, let's look at how the week started for us here in this community. Well, at the beginning of the week, we remember that we had our key level just right around the $1,980 area, and we saw how price action was oscillating just right around the 1,980 to emphasize how important and crucial this juncture is, as we saw price confined within the 1,985 and the 1,973 $1.50 level to emphasize the uncertainty that was going on in the market as at that point in time. Then in addition to that range was the fact that price was above the ascending trend line, which captured a series of higher lows since last week Wednesday, as you will see here. Now we saw something interesting happen during the New York session yesterday. Even during our live session on that day, we saw the breakdown of the ascending trend line, and we said if this continues, then a breakdown of the support line of the range at the $1,973.50 level will be welcoming selling opportunities. And with a sell stop order below that structure, we captured that move as we saw price move about 80 pips in our favor before the bullish momentum came in. And of course, as usual, we moved our stop losses accordingly, secured the position, and we must have been taken out from that position at a worst case scenario break even. Now we also talked about the potentials of buyers coming in, and we agreed that the only condition that will make us to buy is for price to break out of the 1,980, which actually happened, and we saw price skyrocket to find a new high at the $2,007.50 area, scooping about 270 pips on that single move. And remember that we also had multiple entries like the 1,985, the 1,989. We also added one more at the $2,000 area. So it was quite a massive start to the week for us on the XAUUSD, and not until Tuesday, Wednesday, we begin to see the resumption of selling pressure around this area, giving us a series of lower highs. That is, a descending trend line was now marked out as a result of this to incite the potential that price action may begin to find some selling pressure, which may be a retracement of the impulsive move we've been enjoying since last week's trading session. Now, there is something very interesting about the structure. During our yesterday's trading session, remember that we bought around the $2,000 mark, but unfortunately, we were taken out of that buy position in a loss. And also remember that we had a sell stop order below the 1,996 to capitalize on the downtrend move as we rode the move all the way down, adding more positions at the 1,993 and the 1,989 before this bullish momentum come in. And if you are taking advantage of that bearish momentum, you must have been out of your trade as price action, as buy pressure resumed at that point in time. Now, with the current situation we have right now, we are at a very crucial juncture in this market where a high level of patience is required. Now, the first thing I was able to observe here is the inability of buyers to be able to find a new high, as you would have noticed that since price tested that high around the $2,007.50 level, you will see that we have a selling niche between the zone here, as every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers, hereby emphasizing the strength of bearish pressure around that area. Now, the second thing I was able to identify here is the emergence of a reversal pattern in the form of a double bottom structure. Now, if we take into consideration this impulsive move into this high, we saw price drop into the structure, and the inability of price to break out of the previous highs, giving us something like a double top structure. And from a technical standpoint, when we identify such a structure or pattern, the next thing we want to be doing is to mark out the neckline, which interestingly lines up with the $1,996 level. Now we want to see price break down the structure to validate that reversal pattern, which was exactly what happened during the New York session yesterday. We saw price break down the neckline at the 1,996 level, and in fact it came back into this area, and it's looking as if price is retesting it to incite a downtrend move. So that is one of those parameters that will be supporting a bearish momentum for me today. today. Now, secondly, is the fact that while breaking down the neckline, we also saw price break down the ascending trend line too as well. And after breaking out the ascending trend line, you can see how price came back to retest it, and since then we have seen a consolidation phase around this area. And with the way things are going here, as long as price remains below that ascending trend line, we want to feel comfortable in a sell position. In addition to that ascending trend line is the connection of the series of lower highs here formed, giving us a descending trend line as well. So we wouldn't be thinking of buying the XAUUSD as long as price action remain below these structures. And as it is right now, I'm of the opinion that selling below the $1,993.50 level seems much more reasonable at this point. I personally have a position triggered already with a stop loss anywhere above the 1,996 level, which dovetails to about 25 to 35 pips, which is not bad at all for this current position. So let's see how the market will play out here. So personally, we are looking for selling opportunities below the $1,993.50 level, and look out for more selling opportunities if price will continue to drop and break down levels such as the $1,989.50 level, 1,985 area, and of course the 1,980 zone. So that is how we are going to be managing a sell position at this juncture. However, I don't want us to ignore the potentials that buyers could still come in, considering the recent development from the United States economic docket, the U.S. Government bond yield dropping to its 2-month low at this point in time, may be contributing to limiting the US dollar, which in the long run will be supporting safe haven assets such as the gold. And in this case scenario, what are we going to be seeing on this chart that will make us to negate the idea of selling and then hold on to the idea of buying at this point? Well, personally, if you would ask me, I would need price action to break out of this descending trend line. Very, very important for me. I want to see price break out of this descending trend line, and if it breaks out of the descending trend line, I want to feel comfortable buying the XAUUSD. Then we also have a level at the $2,000 mark, which can add more positions to our existing trade. And if price continues to climb up, we have the $2,007.50 and the $2,010 area. These are levels that if price ever breaks out of them, we want to be looking out for buying opportunity. So as you will see here, our center of focus for today's trading session is between the $2,000 mark and the $1,993.50 level, where depending on the direction of the breakout will give us an idea into where price will be going for the second half of this week. So I encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So on this note, I will see if I will be rounding off, and let's see, while I'm trying to round off, I want to see if there are any questions whatsoever as regards to the setup. And if you have any, let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions, while you also want to be using that time to mark out this level. Then I also want to state here that today being a public holiday in the US, there is a chance that there will be low liquidity in the market, and we could actually see a lot of choppy situations of price action go into a range ahead of tomorrow's trading session. So please take that in mind too as well. Right, so I see a comment here from Steamroller, says that after gold, can you check lower time frame of US oil it's looking like a potential sell is brewing. Well, I think we talked about the US oil earlier and we identified the $76 area where we said if price drops below the $76 level and we have lower highs and lower lows, we want to be joining a bearish momentum. So anywhere below the $76 area is a seller's territory for us to consider selling the US oil spot. I did mention that during our live session, okay? All right, so in the absence of no other questions, I want to assume that we are all on the same page, and in that regard, I will be rounding up for today's trading session. So I'm already out of time already, and I just need to round off at this juncture. So it has been a wonderful moment with you guys today. I really appreciate every single moment. Happy holidays to you. And for those who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I look forward to seeing more of you in our subsequent editions, as the more time you spend with us, the better you will become in understanding the analytical approach and eventually be able to use the information we gather here to make your own independent trading decisions. On this note, I wish us all the best of luck, and please remember that you do want to exercise patience, allow your structures to mature before you jump into any positions here. And remember to always have a well-defined risk management strategy which is consistent throughout all your trades and positions, as every decisions we make in the financial market is more or less an educated guess until price action hits your TP target. So wishing you all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.